Today's Animal Spirits is brought to you by VinoVest. Michael, I think last year on Animal Spirits, we talked about the fact that there are now more indexes than stocks in the stock market, correct?
Mm-hmm.
There's an index for everything. VinoVest created an index for wine. It's called the VinoVest 100. They basically look at wine prices from the best regions around the world: Bordeaux, Burgundy, Champagne, Rhone, Tuscany.
Long Island.
Traverse City and Long Island did not make it in there. And they created an index that goes back to 1985 and look at prices.
What's the index doing today? Stocks are down 3%.
I would like to think wine is probably rising today. Alcohol consumption rises when markets sell off, right? And I was looking at a list from VinoVest. They have a list of the 20 most expensive bottles of wine on the market right now. The most expensive list.
Let me guess.
By the way, I can't say any of these names. It's a 2015. This is like you pronouncing Denis Villeneuve.
That is Villanueva.
It's a 2015 Domaine Leroy Musigny Grand Cru Côte de Nuts from France, and it's selling for more than $101,000 for a bottle of wine from 2015.
It's like 6 ETH.
Yes. The number 2 most expensive bottle of wine on the market sells for over $73,000. Rich people like to drink wine. They like to drink good wine. That's the idea behind VinoVest, right?
You have to drink that wine?
I think you probably do. Or you put it in your wine cellar and make it, and it looks good.
Who drinks a $100,000 bottle? Well, you think it's it's pretty good.
Or you hold it in your basement and it appreciates in value. That's the idea behind VinoVest. So if you'd like to learn more about investing in wine, go to vinovest.co to learn more. Welcome to Animal Spirits with Michael and Ben. Do I really have to care about this China real estate story, this Evergrande? This is a company I have not heard of until 5 days ago. I honestly thought when they first were talking about the story, this was the container ship that got caught in the Suez Canal.
Listen,
now do I really have to macro this much for this thing?
You don't have to care about this, but this cares about you.
All right. Come on. Do you care? Okay. Did you buy an NFT of this company yet or something?
Well, what are we trying to say exactly? I mean, this is a big story. It's a big story. Is it being over?
Is it though?
It is. Are the risks being overblown? Potentially. But it's the second largest property development company in the second largest economy in the world, and they can't pay their bills. So Ben, if you're too cool for school on this story, if this isn't a story, what is? I'm not saying you have to read the financials, but this is
one of the downsides of the information age is that we're being force-fed the fact that we have to care about every macro story there is. And this is especially true probably since 2008. Remember the Cyprus banking crisis that for like a weekend, like a 3-day weekend, we all had to pay attention to in like 2010? Like it was really going to be this is a domino, this is a canary in the coal mine.
Dude, there's a difference between Cyprus and the second biggest property company in China.
Okay. I also think
Cyprus has a population of what, 40,000? I am making that up.
And China has a bigger checkbook than anyone. If they want to make this go away, they can make it go away.
What if they don't want it to go away? What if they're trying?
Maybe they don't, but I am sick of every time a big company gets in trouble, they go, kind of feels like Lehman to me. I'm just saying, this is like Lehman Brothers. Anyway, I'm not trying to completely poo-poo this. I just don't have enough bandwidth for this.
Fair enough. I just hope that take doesn't age really badly. I hope we're not replaying that clip 6 months from now.
That's fine. If this was a canary in the coal mine, I'm willing to bet that, because every one of these is not the canary in the coal mine. That's my stance to take on this stuff. So the S&P 500 is now down.
No, that's a great stance. The appropriate stance is.
Here's the thing. Whenever I decide to retire and I look at my pile of retirement savings, am I ever going to go, I wish I would have played that Evergrande story a little better back in the day, like from a macro perspective, because I would be doing so much better if that was the case.
Of course not. Listen, you're Bob the world's worst market timer guy. You buy at the top and you just hold. I get it. So the S&P 500 is now down 4.9% in 96% of all years since going back to 90 years or something, however far back I have this data. There's been a 5% correction from peak to trough. We haven't had that yet. This is like about time. Right.
We haven't even had a 5% correction this year.
Not fighting you. I agree. Sometimes, I just wrote this today, sometimes the market is just looking for a reason to sell. And this is as good an excuse as any. And I just feel like maybe on the one hand, I wrote like the market is not omniscient, meaning that you can't judge the future based on the stock market, certainly not one day's returns, because it could get a lot worse from here. But if the market was really worried that this was the next Lehman, don't you think stocks would be down a lot more than 2.6% and down more than 5% from the highs?
Yeah, and the Chinese stock market has already been getting crushed of late, and the U.S. stock market hasn't cared. Right? Here's a secret. You want to know why the market's really falling? The Tobin's Q ratio finally got way too stretched, and investors said enough. Right? Remember Tobin's Q?
Of course.
Did we throw that one out the window yet? That's like tangible as anyway. Okay, that one fell flat.
Yeah, that was not your best dad joke. The VIX is at 27. I don't know. Listen, we'll see. We'll see where we go from here.
All right. I don't have the bandwidth for it now. I'm sorry. I
can't
make myself care about another macro story like this that in 3 months people are going to go, hey, remember that story?
When as somebody who is buying, who is going to buy global stocks in about 10 days, I hope selfishly, I hope they go a little bit lower. I'm looking for a deal. I'm looking for a deal.
Yes, everybody. Most people should that are continue to save. I just think, yeah, I don't know. Throw this in my face if I'm wrong. I think
I don't want to.
Not okay. All right, let's put it out there. If you'd like to go make some hedging trades right now, I'm fine. We can stop the show.
Who's making hedging trades? We agree.
All right. I just think you don't have to act like it. I think a lot of investors, because it's so easy to pay attention these days, pretend that they have to act like a hedge fund manager when managing risk and like hedge every little risk. And I don't think that's ever a good way to manage your money.
I mean, come on. I'll push back. You think anybody's doing anything right now? You think the average person is doing anything with these headlines? I don't think so.
Okay, someone's selling. Market's down, so someone's doing something.
Not me.
Okay. All right. This is a good one from Ed Yardeni. He's saying this is about bond flows. There's actually a very simple explanation for why the 10-year Treasury bond peaked at 1.7% on March 31st of this year and fell to a low of 1.2% on August 4th. What's it at now, by the way? Are we getting a flight to safety on a day when the S&P is down 2%?
Rates are dropping. Rates are dropping.
Right.
See, all right. So, whatever. Keep going.
On a 12-month basis, net inflows into bond and mutual funds and ETFs soared from $572 billion during January to peak at a record of $1 trillion during April. Through July, $861 billion. Basically, this is the contra to everyone is piling into the stock market. And if you look at this chart from Yardeni, just in the last 5 or 6 months, bond flows have exploded in ETFs and mutual funds. This is one that hurts your brain a little to think about because you see all the speculation and excess that the Evergrande story is going to kick out of the market, right? I'm going to play the other side. So this is the clip where I say this really is a big risk. So if you want to just delete the other part, this is a huge risk and all the excess and speculation is going to go out of the market. And the flight to safety in JPEGs is where you want to be, right? Sorry. There's so much money going into bond funds that it hurts my brain a little to think about how much speculation and excess we've been seeing in the months from all these other corners of the market. Right? I think this is actually a really good sign for things not being so out of hand.
Yardeni had a great line. He said, contrary to there is no alternative, bonds are still viewed by some investors as an alternative to stocks.
Yes, even with ridiculously low interest rates.
How much of this? I mean, the Fed bought bonds, but not.
Yeah, but these are
buying all these bonds.
But these are actually funds. So this is not what the Fed is buying, right? This is actually funds and ETFs.
They bought ETFs.
It was a minor amount.
But still,
they
small.
stopped.
It was small.
Yes. Okay, sticking with the interest rate thing. So this chart was going around from the Wall Street Journal. I think it's actually an older chart, and it shows building a pension. Like a lot of the pension funds have their expected returns at like 7.5%. Call it 7 to 8%, and it's going by year. So it's 1995, 2005, 2015. What portfolio it would have taken to get these expected returns? And it's basically saying in 95 you could get a 7.5% return simply owning bonds. Standard deviation's low, bond yields were that high, you could get it in high quality bonds. By 2005, it would drop to roughly half of your portfolio in bonds. And then by 2015 and now probably it's more like if you are using expected return from bonds, you're at like 10% in bonds, and everything else has to be private equity and stocks and all this other stuff. And your standard deviation's higher, obviously. This is a very cool chart, and it says a lot. And I think a lot of people say this says a lot about today's market, but I think it really says a lot about yesterday's market or prior, back then. That is the anomaly.
Yeah, I think so. You should have to take risk in order to get reward. I think this idea that like bond investors are being robbed, I don't know. I mean, are they?
But do you think that back in like the 80s and 90s, people knew how good they had it? Like, we can invest in a treasury bond paying 8 or 9%. It's basically free money. And interest in inflation was falling, not rising. Like, do you think anyone at the time sat there and goes, God, we should pinch ourselves. We're never going to see this again?
No, I don't think that.
Right. They probably thought it was still pretty difficult to invest, right?
I think most bond investors are too busy living their life to get excited by bond returns.
Okay. You know a lot of bond investors? All right. I'm just saying, this is a very pretty chart that says a lot of things, but I think it says more about the past than it does the present or the future.
There was a company that was in the news. Matt Levine wrote about them. Don't buy the bad data. What's the name of this company? App Annie. I never heard of them. This is interesting. So it's a company that aggregates user data on different mobile apps, I gather. They sold their data to hedge funds and they got in trouble. They paid a fine. I can't remember the size, but I think it was pretty large. And it was sort of, I don't know if it was insider trading, but the reason why they sold the data is because they sold the data without getting user consent. They didn't tell the users that they were selling the data. I think people had the option to opt out and they sold their data anyway. Whatever. We'll link to this story in the show notes. But I was thinking about user data and hedge funds. I took Tegas for a spin. Tegas is that company that Patrick O'Shaughnessy, it's a sponsor of their podcast. And I was looking for a particular piece of data that I couldn't find.
Tegas is the ZipRecruiter of finance.
Oh, that's good.
Did you hear him? Yeah, right? Yeah.
Oh, you mean because you hear them on podcasts?
Yes.
And so I was thinking, so what Tegas is they provide users with transcripts between business executives and analysts. So if you wanted to learn about Peloton, Affirm, whatever, you could read calls between an analyst and say the former CFO at one of these companies, And I was just thinking, like, it is amazing how much data.
So is Tegas, I don't know much about this company. Is Tegas hiring these people to do these interviews? Are these interviews being done elsewhere and then they're given access to them?
I think the way that, I don't know the business model. I think the way that it works is that analysts who use Tegas give this to Tegas in exchange for access. I'm not really sure exactly.
Okay.
Anyway, right. That's neither here nor there. The point is that this is table stakes in terms of the data that hedge funds have access to. And it's still not impossible. It's still supremely difficult for them to gain an edge because they all have access to all of the data. And so it's just funny thinking about regular people opening their app and competing with them, like LOL, good luck. But LOL, they're winning.
Because
right, so it's like funny. It's like my first thought was like, oh man, imagine competing against these people who have all of the data and everything, and then it's like, hey, wait a minute, people are competing against them, and people are winning.
Because the simple way of looking at things for the last few years has been right.
This isn't Occam's razor market, and the razor is buy.
Yes, well, everything we've heard is don't chase yield and don't speculate and don't buy
terrible advice.
Don't buy
Throw
IPOs
caution
and all
to
this
the wind.
Stuff. Every piece of academic research you've heard, don't buy expensive stocks, has been thrown out the window, and everything you're told not to do. I mean, basically, it's mostly been buy what's going up, and that has worked for you for a while.
Is that like the Costanza? It's like the Costanza market. Do the opposite of everything.
Yes, the opposite of everything you've told, and everything that they learned. So these people all went to Columbia Business School and learned about the Ben Graham value investing course, right? What's the contra Ben Graham? Like, what's the growth investor course at Columbia going to be?
If Ben Graham was here, would he say, "You idiots are still reading that book I wrote 75 years ago"?
Okay, I'm going to do a blog post out loud right now. So I'm getting to this in my recommendations about Jesse Livermore. I'd never read the Boy Plunger book before, which is excellent, the Jesse Livermore biography. And they talked about how he made all his money in the, not the boiler rooms, what is it called?
The bucket shops.
Bucket shops, there you go. So it was an in-depth on the bucket shops, but it talked about when he killed himself in 1940 and he tried to make his fortune back after losing it 5 times or whatever. Most of the stuff that he did in the past to make money had been regulated away, and it didn't work anymore, or it didn't work anymore. I think a lot of people think, well, he just followed trends, and he did that, but a lot of stuff he did was a little shadier than that. When Ben Graham died, remember he said, all the stuff I did in the 30s and 40s to make money doesn't work anymore.
Right. I think, did he die? When did he die? I feel like that was the late 70s, but when did he die? That was a long time ago. He said
he basically said all the stuff that I wrote about in my book, the formulas and everything, like, it doesn't work anymore. And he suggested to most people to just index fund. That was in the mid 70s when index funds were just coming out, basically.
He died in 1976. So he said this stopped working 50 years ago.
Yes, exactly. Yes, which is kind of crazy that these two, maybe because they had so many good quotes, and I mean, Jesse Livermore probably remains the most quotable trader ever.
Although not a great call on Ben Graham's part, to be honest, because value investing worked for quite a while.
He was a little early, probably
a few decades early.
Yeah, when you're a value investor, you get in early. All right, Robinhood is going on a college tour to recruit new customers. Is the headline of this Wall Street Journal app story.
This is not, like, my first knee-jerk reaction was like, this is not bullish. Like, in other words, they've exhausted all of their. Everybody that they could have gotten, they've gotten to already. They're going. What's next? High school?
Potentially, but this. I mean, do you remember? Did you ever have this at college? Before you got kicked out? No, before you got kicked out, where you'd go to the quad thing, right? You know, right when you first sign up for school, and they have
whatever you're about to ask, and the answer is no. But go ahead.
Okay, so they'd have these credit card companies at a table set up, and it would be like, sign up for a credit card here. We'll give you a free T-shirt and $3,000 of credit. And they try to hook college kids in before they know what they're doing.
Speaking of free T-shirt, Michael Antonelli put me onto this. $6.
Callahan Auto.
Literally $6.
Did they spell Callahan wrong because he was paid $6 for it?
Did they? No, 2 L's.
Okay, not bad. All right,
$6.
I'm surprised you don't have a. All right, I'm surprised you're a Tommy Boy fan. Obviously, You're okay with that?
With
what? I
what?
want to make sure you don't have a contrarian take on Tommy Boy like you did with Top Gun.
Okay, no. Okay. I saw Tommy Boy when I was 11. It was perfect.
One of the few movies I've ever watched in the theater twice. I went to see it twice in the theater. I liked it so much.
I've never done that.
That's probably one of the few movies I've ever done that for.
Good call. Good job by you.
I was ahead of my time.
All right. Cover story. Crypto. Crypto's a cover story in Barron's this weekend. Inside the new currency wars. Did you read this?
No, but I feel like the only time we hear about Barron's anymore is when there's a cover that people think is a sign of a top or a contrarian. But I didn't see this one.
You spoke about more indexes than stocks. The number of cryptos has jumped almost 140% in the past 2 years. There's now 6,500 cryptocurrencies.
Yeah, but they're all very scarce.
Why not?
That's pretty impressive. So, okay. There's a huge drop in this chart. What was that? The first crash when we lost some? So there's nearly 7,000 different types of crypto. How is this possible? Like,
you could, because I guess, I don't know, it's with the forks and everything, it's super easy.
Do you need to at this point, do you need to hire robots to go into all the Discord channels to pay attention? Which, by the way, if you're doing research on crypto and you don't mention Discord, you get fired automatically, right? Like, you have to say I'm in the Discord chats, right? That's the new, in stocks, you say I'm a bottom-up fundamental analyst. In crypto, you say I'm on Discord learning about all these when no one else is.
Mm-hmm, mm-hmm.
That's what everyone says. Okay, I listened to a podcast this weekend on DeFi and crypto, and here's a narrative that I'm totally over because I think...
Which one? Give me a plug.
It sounds amazing. So this is Cam Harvey with Barry Ritholtz on Masters in Business. And I feel like
no offense to Cam and Barry, but you listen to two boomers talking DeFi?
No, apparently Cam was way ahead of the game and started a Bitcoin in his class in 2014.
Oh wow, good friend. By the way, I actually did read his book. Oh, here it is. Keep going.
Okay, what's the book called?
It is called DeFi and the Future of Finance.
So anyway, I think the first narrative that really made sense to me when I was trying to wrap my head around Bitcoin in 2016, 2017 was, let's say you're in a third world country, the banking is pretty poor there, you want to get your money out. This is a way to do that where it's permissionless and decentralized and all these things. And so people mention places like Venezuela and stuff. And Cam Harvey mentioned this. And if this stuff is going to work, if DeFi really is going to carve out a huge piece or potentially take over the finance system, I'm sorry, I'd be happy to be proved wrong here. It's not going to be from unbanked people. Think about you are a finance person with a ton of experience and know what you're doing and you have some money. You cannot figure out some of this MetaMask wallet stuff in gas fees. Are we really supposed to expect people in the third world who don't have bank accounts already to figure this stuff out too?
No. So I agree. I think this is a bit of a red herring.
So listen, if DeFi is going to take over the financial system, or it's going to just carve out a huge part of it somehow, it's going to happen because rich people decide it's going to. If rich people decide that, and it could be if it's older rich people, it's going to happen faster. And if it's younger rich people, it's probably going to happen a little slower. But if rich people decide, yes, we like this because it gives us better rates on our loans and it gives us higher yields on our savings, then and it works as a substitute for our credit cards or whatever it is, then it's going to happen. If rich people decide this is not going to happen, it's not going to happen, right? It's not because of people in the third world. No offense to them, but if this stuff takes off and happens, it's going to be because rich people want it to, and they move their money there en masse. Anyway,
I'm just looking.
Get off my soapbox here.
No, you're right. I mean, I think you're right. I agree with you. Mark Rubenstein did a post this weekend about the unbanked, and damn it, I can't find it. He gave us.
I just read it today on my lunch hour.
He gave a statistic about the number of people that were unbanked, and I don't think it's not
1.7. It was 1.7 billion people, but he said they were all mostly in. Yeah, I just read that piece today. I agree. That's a huge market, and kudos to anyone who's working to get that. I actually did some learning about that in an MBA class. So and we took for a spin. Like part of our class was using a company like Kiva. Have you heard of this before? Where you make loans to people in third world countries, and they found the majority of the best people to make loans to were women in these places because they way more than men were better at paying back their loans, and they were better at planning and looking ahead to the future. Interesting organization anyway. There was money there.
There was insider trading in NFT land over the weekend.
I for one am shocked.
One of the people, I forget what he does at OpenSea, but he basically was buying.
It was like front running, right?
He was buying projects before they got featured on the website, and obviously what he did was wrong. But
he was the co-founder and CEO, right?
No, I don't think so.
This story you put in here says on Tuesday, OpenSea co-founder and CEO Devin Finzer said that. Oh, a different guy. Sorry, you're right.
Yeah, no.
Head of product, sorry.
But boy, this guy got dragged so badly. And I don't know if he's like excommunicated from the community, but yeah, that was tough. Another one. There was a crypto Ponzi scheme busted over the weekend. By the way, as far as the OpenSea guy goes, this was exposed because somebody, obviously this is all public on the blockchain, people could see other people's accounts. Somebody found out that he was a bad actor, exposed it.
Nice. But did you find your lost crypto yet? Remember you were going to do some pairs trading, you thought you lost some?
On Uniswap? No, I actually don't think it was gone. But what I did lose this weekend was my wallet again. Where was I at? Stop and Shop or something? I was at a grocery store, and the credit card machine was down. And my first thought was, blockchain fixes this, right?
No, you know what really fixes this? What I can't wait for? I don't ever want to hold a wallet again. I want my driver's license to be on my wallet, and it can all be face scanned to get into it. I want all my credit cards on there. put my library card on there, my Costco card, whatever, any card. Just put it all on my phone, and I just have to carry my phone and nothing else. No cards.
Well, Apple Pay. But
I've never used Apple Pay before.
Then you can't ask for anything. Stop.
What do you mean?
You can't ask. If you don't use Apple Pay, you have no right to ask for anything.
Why do I have to use Apple? Where can I use Apple Pay?
Everywhere. You just said you want something on your phone. Apple Pay, let me just tell you what Apple Pay is, because clearly you don't know. Apple Pay, you put your credit card onto Apple Pay. And so when you go to the store, you just go, dee-dee, and you just click and you walk out. You're welcome.
Okay. What's the difference between my credit card just tapping it on the machine? It's the same thing.
You have to take your credit card out.
Okay.
Isn't that part of the nuisance?
Yeah, sure.
You're welcome.
I've got my credit card loaded on my phone. I guess I'd never really been to a place where I knew I could use it.
You could use it everywhere.
I'm a noob. Hand up.
Yeah, you could use it everywhere. Next, go to CVS and use it. All right. So anyway,
I'm in the Midwest. We probably don't have that here.
Stop it.
We're still listening to music from the '90s here.
So I'm at Stop and Shop, and I've got a full cart of groceries, and I'm like, oh great, the machine is down. I got to go home, get cash, blah blah blah. Turns out they had an ATM in the store. So I go to the ATM.
What'd you pay? $5?
$1.50. Not bad.
Okay.
So I go to the ATM, and I'm thinking, like, just as I'm thinking about solutions, I'm an ideas guy. As I'm thinking about solutions, I go back to the line, and I have my cash, and I'm ready to pay, and I hear over the loudspeaker, Michael Batnick, please go to customer service. I left my debit card in the ATM machine.
Oh, nice. Way to go. See, usually my ATM, it makes you pull your card out before it gives you the cash. That's like a nudge, right?
This is an old school ATM.
Okay.
Another thing that blockchain fixes, and I'm not kidding, is I went to a doctor today because I hurt my back from sneezing. True story. And I had to fill out about 7 pages, and a lot of them was duplicates, client information stuff.
Okay. When I go to the doctor or the dentist and they hand me one of those, I never fill them out. You have my information. No.
I was a new patient.
Oh, okay. Gotcha.
But why can't it just be like, here, this is my code. There's everything. There's all my files.
I agree. By the way, back to the wallet stuff. The greatest lost wallet scene of any movie in history. You know what it is? In Dumb and Dumber.
The best. Samsonite? Luggage?
When Jeff Daniels tells Jim Carrey to only get the essentials because they have like $40 left to their name, and he walks away with the box of stuff, of booze, and the big hat on, and then he stops and gets a smut magazine on the side of the...
Excuse me, little old lady? Is that scene?
Yes, and he drops his wallet in there, and then she steals from... Yes. Speaking of rewatching Tommy Boy toys, that's probably the movie I've seen most in my life, more than any other movie.
Dumb and Dumber. I could probably still quote every single. Yeah, I mean, 90. What a great movie. All right, Fidelity met with the SEC to pitch them on the fact that nobody wants a Bitcoin futures ETF.
I don't understand why Fidelity hasn't been doing this. Fidelity's crypto strategy makes no sense to me. They started mining Bitcoin back in like 2017.
It's regulatory. That's it.
But
what do you mean their crypto strategy? What would you do?
Fidelity should have been the first one. They should have been custodying all this stuff for everyone. They should have been.
They are.
They should have been laying out a Bitcoin ETF. They should have been the first one. The SEC would trust Fidelity with this, don't you think? Over everyone else. That's such.
They are custodying.
It doesn't seem like they're. I don't know. Who are they custodying for?
Institutional clients. I think it's a big business.
Okay. It doesn't. I'm saying for individual. I don't know. Fidelity should own this space, is what I'm saying. It doesn't seem like they do.
So they did some surveys. They did some surveys. 33% of U.S. institutional investors are invested in digital assets today. 33%. Their preferred way to access digital assets is through an investment product. Right, makes sense. They're not looking to do custody at Fidelity. They want an investment product. 69% of U.S. institutional investors feel digital assets should be part of an investment portfolio going forward. Sounds nice. Does that sound high to you? Not high enough?
All these surveys, you can't trust them, right? I don't know. Here's something that I never could have seen coming. After Coinbase CEO Brian Armstrong called the SEC sketchy, today they canceled their lend program.
Stock is, the whole market's down. Stock's down 5%.
Okay.
Oh, this is a good email. I'm a mid-20s guy that works in construction real estate development. In July 2020, I decided to take my brokerage account portfolio and put it all in BTC. Good timing. I even added some Solana after Zach Prince said on your show in April. I took 40K to over 250. Good job. My dream career has been to operate a single-family rental vacation portfolio. My girlfriend, who I live with and have cash flow to afford a second home comfortably. My struggle is whether to ride the crypto wave or go out and start my own business with the money. I'm struggling because I don't want to be the guy in 2035 who sold all his crypto and now it'll be worth millions. However, I also couldn't bear to watch it go to zero. And at the same time, my life goal isn't to be a hodler, it's to run my own real estate business. Okay, that's it. You just answered your own question. This is very easy. You just said, I couldn't bear to watch it go to zero. It's probably not going to go to zero, but still. If you can't watch, I mean, and you said your life goal isn't to be a hodler, it's to run your own real estate business. So you took your account from 40 to 250. Amazing. I'm not saying you need to sell all of it, but at least if that's your goal in life, then live your goal. If your goal is not to be a holder, then sell some Bitcoin and do your thing.
You spend the majority of your life at your job. For most people, right? They spend between sleep and job, that's the majority of your life. If you're working most days out of the week, that's what's going to be on your mind. And if you're working a job that you don't like and you have this other dream that your portfolio is not going to make you any happier. The thing is, too, let's say this guy is able to start a successful real estate business and he's making money. You can buy back into crypto.
Right. Or do you think, let's say that he does it and it works. He's like, man, you're not going to say, man, I wish I held crypto. But right? You're not going to say that. I mean, if it goes to $1 million, you probably will. But if you don't sell and you don't live your dream and crypto goes to even down to 30 or 25, you're going to feel like an idiot. So why put yourself in that situation? If it continues to go up, well, so don't sell all of it. But I feel like you just answered your own question.
I also think the demand for someone in the construction business, I don't know exactly what he's doing. You're going to have millennials buying houses and fixing them up for years and years to come, if that's what you're helping out with, where the demand for that business is going to be strong for a long time coming. This sounds like a good business to me. If this is Shark Tank, we're saying yes, thumbs up, right?
Ben, the market is now down almost 3%. Would you like to take it back?
You got me.
Would
that
you
extra
like to
50 basis points.
put back on your macro hat.
All right. My tinfoil. All right. You're right. We were due. We haven't, how many? We've had 3 down 2% days this year. We haven't had a single down 3% day all year. Bring it. Let's do it. Come on.
I could not agree more. But so right now I'm acting very cavalier. Let's get a sell off. I want to sell off, but not too much. Not too much.
All right. Can I do the headlines for today?
Give me like 12 to 13. Go ahead.
Dow tumbles 1,000 points as China real estate company. Let me say.
Don't tempt the gods here. Don't tempt the gods.
Tumble. There's going to be a lot of headlines with tumbles and royals and all the. Come on.
So we've been the S&P 500 has been within 5% of its all-time high for 220 days. It's the 8th longest streak since 1950. Things have been too good for too long. Let's shake it up.
The market was up over 100% from the bottom. Like, if you watch the market go up 100% in a 3% down day is going to shake you to the core for investing, then come on. I still think.
But I guess that's where I disagree. Yeah, I don't really think. I mean, yeah, some people are selling, but I think most people look at this and don't say, "Holy cow, I need to go to cash."
Right. I actually think.
Obviously, most people don't do that.
I'm planting my flag on the young people being better investors because they've been through things like crypto and meme stocks that are so volatile. I think if anyone's selling now, it's institutions and it's older investors who are more concerned because they have bigger portfolios.
It's always institutions.
Yes, because they control the most money, as do boomers, right? And I think we talked about this. So we have, if you missed our podcast on Monday with Rick Bookstaber, who is a former chief risk officer for a bunch of different Wall Street firms. If you have more money and you have someone with a lot of money and someone with a little money, a 10% drawdown is going to feel way worse to someone with a lot of money because on a dollar terms, it's going to dwarf anything with something. This is the reason why when you're young and you're building up your portfolio, the percentage of losses shouldn't matter at all to you because you're losing a little bit on a smaller balance. for most people, for most normal people. And this is why we're seeing $1 trillion go into bond funds, right? Because people don't want to see the majority of their portfolio fall when the market hits a rough patch.
So
bring it all back, Michael.
What's this? What did Matt Klein do on inflation? I missed this piece.
Basically, he's saying team transitory is going to win. After you relented last week and said, all right, maybe it's not all transitory. The day afterwards, inflation numbers came in a little bit.
I feel like you're putting terms in my mouth. I said I'm open-minded. I mean, I read the tweet from the CEO of 3M. Sorry for saying that he might have a better, he might have his hands on the pulse of inflation more than you do.
Here's the thing, though. Okay, but here's the thing. The CEOs complaining about inflation are doing that so they can raise prices on their customers. They don't really care about inflation. They just want to raise prices and want to blame it on someone else. So I'm sorry that you capitulated at the bottom and decided. He's just saying that like the deceleration in inflation is coming from things like used cars and trucks and hotels and airfares and all this stuff. I don't know. It seems to be going that way. So it's like we're probably arguing now: is inflation really going to be back to 2%, or is it going to be 3% or 4%, not 8% like some people wanted? How's that?
Fair. You know how much my cost to fill up my gas tank this weekend? First time I broke out over 70 in as long as I can remember.
Do you know how much it costs to fill up a Chevy Silverado?
Is that your truck? Your pickup truck? You still driving that?
Yes.
What was it? What was the Chevy slogan? Like a rock?
Yes.
I feel like that was like the NBA and NBC days. Like a rock.
Yes. So we talked to the people at the carpool. I just had a fender bender on the bumper, and it's now over 2 months since I've not had my car. They said they've had like BMW sitting on their lot for 3 or 4 months because they can't get pieces parts in from the manufacturers. And so I'm still driving rental.
Somebody emailed us about time inflation. He's like, what if maybe prices aren't going up and I'm waiting 8 months for my couch?
Okay, so we also this past week went through the process of getting a new car. My wife's lease is up in December. And we've been getting emails from Honda for months saying... Time out.
This is... Sorry, I have to interject. This is very much on brand for you and I, because my wife's car is also due in December. But obviously, we know who the responsible one is out of the two of us.
I decided... I was worried we get to December and there's no cars available. So we started poking around, and they basically said, listen, for what you owe on the lease versus what you can get for the car, you have like a $3,000 buffer. The funny thing is, we got the car... We did a 36-month lease. The value of the car versus when we got it 3 years ago is almost the same because used car prices are up so much. We were shocked at how much we were able to get for this car. But it's kind of like going from it's kind of like selling your house now to buy another one. You sell your house for higher, but then you go buy a new one. So we go to the Hyundai dealership. My wife wanted a Palisade because it's got a big third row seat for my kids. And usually you walk into a car dealership and it's full of cars that you can look at. They kind of have the nice spiffy ones all clean, looking good for you, you know? We walk into the dealership. There's literally 0 cars in there. It's empty. It feels like a mall that had been just like emptied out and taken all the kiosks out. There's nothing in there. There's no cars. On the lot was maybe 20% full of cars, which is usually full. And they were like, listen, we have 2 of these. If you want one of the 2, pick one. Otherwise, it's going to be like 6 months to get another one because we don't have any more coming in. So it's like either basically take it or leave it.
You want this one or that one?
Yes. They don't have to do anything. There's no negotiating because it's like you don't have any choice here in the matter. You take what we have, basically.
When I signed my lease with my wife's car, we were like thinking, do we do 36 months, 48 months? Like, 36 months it's always fun to get a new car every 3 years. And so turns out 48 months, that's where the alpha is. We should have gone 48 months. We wouldn't be in this predicament. I got to get on that, by the way.
Market timing.
You know what we didn't mention, by the way? So stocks are having a rough day. Cryptocurrencies are many things, Bitcoin specifically. You could call it a store of value. You can call it digital gold. You can call it whatever you want. What it's not, it is not something that will hedge against stock market declines. Bitcoin's down 10%, Ethereum's down 12%, Solana's down 14%.
Yes,
not a hedge.
It's definitely a risk on, risk off asset. And it's been
many
risk
things.
off.
It's not a hedge.
I mean, this is the 9th crash for crypto in the last 6 months. It feels like, basically.
This one feels different. No, I'm just kidding. They all feel the same to me. All right, let's do this kind of quick because we're running late. The Childcare is broken. I feel like we've gone over this before, but it's really breaking now, and politicians are starting to notice.
So we're getting notes from our childcare provider. So my kids go to preschool. It's at the same daycare where they went to daycare since they were babies. They're basically saying we're shortening our hours in the day. So they used to go from 6 a.m. to 6 p.m. They're shortening it from like 7:30 to 5 because they can't find enough workers. And one of the problems is when I see what they're putting out there, they don't pay enough. And so the Washington Post had one basically saying this child care services industry is down almost 130,000 workers, more than 10% decline from pre-pandemic levels. The median pay in the industry, $25,460 a year. My original thought was, because we pay a ton of money for childcare, my original thought was, geez, the margins on these places must be huge. But part of the problem is, especially when they're younger, you have to have one teacher for every 3 or 4 kids, right? Because especially if they're small and they're babies and crawling around, like you can't just have one teacher for 15 kids. So
yeah, the margin it's the opposite.
So I don't know. I don't understand. People always crap on us for this and send us hate mails about. But why are these daycare teachers not paid the same as regular teachers? Why are they not having the same?
I guess because one of the answers
this should not be a private industry. Is my contention.
Correct. There should not be a private industry. They have no formal training. I don't think you have to go to school to be a teacher.
But the problem is, so many of the people that work at our kids' daycare went to college and have a college degree and are having trouble finding a teaching job, which I'm sure they're probably not anymore. And that's why people are leaving.
All right, some more data points. Childcare labor costs can be as much as 50 to 60% of a daycare budget. This is from the Treasury. Restaurant labor costs tend to be about 30%.
So the Washington Post had a story that said childcare is struggling to find people to work more than restaurants right now. Restaurants are having an easier time getting people to work for them than daycare places. And I understand it's hard work.
Yeah, it's like a lot. And you're exposed to COVID and there's no benefits. You don't get paid anything. So on average, the average family with a child younger than 5 devotes 13% of its income on care. And this is a quote that seems obvious to me. Having a well-functioning childcare sector is good for working families. It's good for children, and it's good for the rest of us. It's critical to a well-functioning economy. But part of the problem, as we've just discussed, is the average salary is $24,000. So more than 15% of these people are living below the poverty line in 41 states. Joe Manchin from West Virginia does not agree. He said, what did he say? He basically said, like, it's not up to the government to provide for education at all levels. It kind of is. This is not suitable for a private industry given the regulatory guidelines at place. So I really do think this is a crisis. Like this is a catastrophe.
And this is potentially holding back the economy because there's people out there who can't work because they have to do childcare because they can't afford daycare. Right?
More than 10,000 workers have left the industry since June.
Yeah, I think it's going to get, especially when you have more people who are educated and going to college and wanting to be in the field. This is tough for people, right? I told you.
It's not the federal government's responsibility to educate all of our children. That was a direct quote. I don't know. It kind of is.
I told you, as a parent, this was like for the amount of money that I've spent on daycare, this is like putting my kids through college without having the time to prepare to save for college.
So in summation, it's very difficult for parents to pay, and it's horrible for the employees. Yeah, parents pay too much, and employees don't get paid enough. It's broken.
And no one's making a lot of money, even though people are paying a lot.
It's broken. This is another good one about real estate. My wife and I are 22 and 24. We're going to be inheriting $500K. We're planning on selling our house in Arizona, where we should make about $100K profit. So we'll have $600 to buy a new home. We're moving back to the East Coast. Blah, blah, blah. Would it be crazy to put all $600 into a house? We plan on paying cash so I don't have to pay for title insurance. See what we did there. We currently have about $100,000 invested in index funds and crypto. All right. We were homeless 4 years ago, and it seems like a lot of money to spend. For a young person, they're 22 and 24. It doesn't make sense to tie up all of that cash in a home given where interest rates are. I completely understand the desire to have a very, very low, if no mortgage, but I just don't think it makes sense at all. I think this is pretty clear.
I think holding some out, like if you can still put down a decent size down payment, but if you hold some out and keep it somewhere else, there's nothing that says you can't pay it off later. So it gives you flexibility to have some liquidity too, right? Because you can't spend your house.
Yeah, it's a lot easier to pay it back than it is to take it out, as exhibited by me and my refinancing that took 7 months.
Okay, so Bloomberg has a piece about how global housing markets are all becoming unaffordable for people.
You know the Leo gif?
Yeah. Yep. They heard me. We have an international audience here, so I heard it from people from Europe, from Canada, from Australia, and the resounding theme from all these people that emailed me, this is totally anecdotal, was people in Canada, people in Australia, people in France or wherever, we all think U.S. housing market is cheap on a relative basis. They think it's crazy that people in the U.S. think it's a bubble because they all see the prices and they think that housing in the U.S. is cheap.
I guess everything's relative.
Settled. Yeah, yes, everything is relative. Basically saying in a lot of these countries, it's getting way, way worse. In the U.S., they looked at the price to income ratio since 1995. And in the U.S., it's basically unchanged. In a lot of other countries, Sweden, the UK, New Zealand, Norway, it's gotten way, way worse. So this lines up with my blog post from last week. Thank you very much.
Nailed it. All right. I was thinking about, where was I? Staples the other day, paying sales tax. And I was thinking, man, sales tax is annoying. They tax everything. It's not enough. And then I put my MMT hat on and no. The reason why we have taxes, why can't we just print money? It's to take money out of the system. I know I'm not, that's not my idea, but that's what I lean back on. If there was no sales tax, then there would definitely be permanent inflation.
But not every state has sales tax.
Well, most of them do.
Yeah, but there's a lot of states without sales tax.
Well, that's why there's hyperinflation in Florida, for example.
Yes.